Welcome to the Sushi Swap Onsen AMA, where we bring on projects that have launched through the Onsen program and give them a platform to reach a larger audience. Today we have Corey with us from dYdX. Thanks for coming on.
Hey, thanks for having me. Glad to be here.
Yeah, awesome. Yeah, just looking forward to this conversation, and yeah, hopefully everyone else is too. So, yeah, we'll start off here just getting a few questions for you. We'll get things going here for 10 or 15 minutes, and then we'll open it up to the audience. Anybody that wants to get on, just raise your hand, and we'll bring you up, and you can ask your questions that way. We've also got the AMA Text Questions channel, and you can ask your questions there. We'll keep that open and keep an eye on that. So yeah, thanks. So yeah, Corey, if you don't mind, just like give us a quick little intro about yourself, some background, and your involvement with dYdX.
Yeah, for sure. So I'm on the growth team here at dYdX. Have been here for almost a year and a half now. Um, the growth team, I would say, is responsible for like almost everything that is non-technical related to the protocol. So everything from business development, getting new market makers and institutional traders onboarded to the exchange, to marketing and growing in other regions, to new user programs, so on and so forth. Prior to dYdX, I was more on the investing side of things. So worked at a crypto fund called Block Tower Capital, and prior to that was at a venture capital fund.
All right, great, cool, thank you. Do you mind just giving us like a quick overview on what dYdX is, so for people that don't know what you got
Yeah,
going on?
yeah, absolutely. So dYdX is a perpetuals exchange. Um, so right now we are the largest decentralized exchange in all of crypto. Um, and so we have 25 markets on the platform right now. The users can come to dYdX, trade BTC, ETH, Solana, Avalanche, all the top coins that you might expect to trade on any other exchanges. But you're trading on a decentralized exchange when you're trading on dYdX, which is one of the biggest differences here. But yeah, taking a step back, dYdX was formed in 2017. So we've been working in the DeFi space for quite a long time. If you had used dYdX in years past, you would have been using an exchange that was more so focused on like margin trading. But over the last year or so, we've completely prioritized the perpetuals aspect to the protocol. And so that's what we're 100% focused on right now. And so the latest version of the protocol, as I mentioned, is a perpetuals protocol, which is built on top of StarkWare, which is a layer two. And so what that really means from a user perspective is once you onboard to dYdX, you could trade perpetuals in a completely decentralized manner, um, while still basically while having like the user experience that you might expect on a centralized exchange. So you don't have to pay any gas costs when you're trading on dYdX. Um, the UI UX is very similar to what you might find on a centralized exchange. So we have advanced order types, we have full API docs, we have instant trade settlement, we have cross margining. Um, and so for all of those reasons and more, we've definitely had quite a bit of users on board to the exchange, I would say, over the last 3 to 4 months. So yeah, I think, in the crypto world, decentralized derivatives are really at this inflection point where people are really gravitating towards these types of protocols now because the product is now at a point where they could pretty much fully compete with what centralized exchanges are offering. And so that's really exciting.
Yeah, absolutely, absolutely. And for most of our audience here too, like they're very familiar with swapping, of course. Being here, and what can you just kind of give like a quick overview on what perpetuals are versus swapping? Because it's two very different things, and maybe just to give people an idea there, like when they're not swapping when they come to dYdX.
Yeah. So a perpetual is a form of future that never expires. And so let's say you come to dYdX, you deposit USDC, which is the only form of collateral that the exchange deals with. And so you have to have USDC to trade. But let's say you want to buy some Bitcoin. You technically buy a contract which tracks the price of Bitcoin. Um, and so you don't actually hold the BTC when you buy it. You're holding exposure to the price of it. And with that, the main thing that you have to pay attention to is something, or the main thing that keeps the price in line, I should say, with what the real price of BTC is on other spot exchanges is something called the funding rate. And so the funding rate just means longs pay shorts or shorts pay longs, depending on what the price of BTC on dYdX is versus the price on a variety of spot exchanges. But yeah, with that, you can get access to a variety of tokens without actually having to custody the underlying token, right? And so, given that we are a decentralized exchange on Ethereum, but people want to say, let's say, trade BTC or Solana or Dogecoin, like these tokens are non-native to Ethereum, as we all know. So the easiest and best way and the most liquid way to get exposure to those types of assets is often through perpetuals. So that's one use case, and the other use case is like perpetuals more broadly are used to gain different types of exposure levels as well as the ability to hedge your positions, across your whole portfolio. So yeah, in a nutshell, I'd say that's kind of what perpetuals are and what they're used for.
Yeah, perfect. Yeah, thanks for breaking that down. Yeah, so you guys have, as you said here, you guys have been building out since 2017. Obviously it's changed here a lot with moving over to layer twos, and you've mentioned StarkWare and the beauties of that. And yeah, I guess like you guys have like a crazy great major investor profile. And yeah, do you want to just like kind of mention or talk about like how you were able to track them, and yeah, just a little bit about that, because yeah, it's impressive to see who you've got behind you.
Yeah, for sure. So I mean, yeah, Antonio Giuliano, he's the founder of dYdX. He was, the first person uh, to raise any capital for the company. And so from there, he actually, that's kind of when we started down the rabbit hole of like attracting a lot of high, high quality VCs, let's say. But since then, the team has been able to continue to iterate and build on a product that a lot of investors have appreciated and gravitated towards. And so I would say a lot of investors, they understand like what dYdX is building and what we're trying to accomplish, as well as they really appreciate the team and the product that the team has been able to build over time. And so I'd say one of the main differences with dYdX and maybe some other protocols is that are very like product oriented and focused. So, over the past few years, we have, just continuing to build out a product that we're proud of, and that we think can compete with any other product in crypto. Um, and with that, I think a lot of investors have just been really excited to kind of back that vision.
Yeah, beautiful, beautiful. Yeah, so with this, I guess like a lot of people might be familiar with some of the centralized exchanges and kind of the user experience that they've had there, and probably, well, like myself here, starting to recognize that there's a lot of similarities, and it's working very comparable to other things. What differentiates you guys, or could you kind of explain to people here, like what is differentiating you between centralized exchanges and even other decentralized, perpetuals or futures platforms as well.
Yeah, certainly. So I'd say, the main thing, obviously, when you're dealing with a decentralized exchange, I think most people listening here fully understand is that, as a decentralized exchange, we don't physically like take custody of anybody's assets. Um, and so with that, like all the USDC on the platform is fully custodied in smart contracts, where, anyone can review them, perform their own safety measures or safety analysis, let's say, on them and choose whether or not to use them based on off of that. From a product perspective, with centralized exchanges, it's fairly similar. Um, the other main things I would say are like for Oracle prices, which are very important when thinking about like how people get liquidated. We use decentralized oracles rather than performing our own Oracle services. And so, for instance, if you were trading on a centralized exchange in years past, you might have gotten unfairly liquidated, or you may have thought you have gotten unfairly liquidated. And some people have said that centralized exchanges, they were incentivized to liquidate people because maybe they made money off of that, off of those liquidations. With us, with dYdX, we use third-party oracles. Chainlink currently is the provider of all of them. And so the only way to get liquidated is if the Oracle price reaches a certain point that would make your account at a level where it should be liquidated. And so there's no like shenanigans there where, dYdX can alter the Oracle price. As it relates to decentralized perpetuals exchanges and like the competitors out there, the main difference is that like dYdX operates a central limit order book. So obviously, when you go to a centralized exchange, you see this order book. But when you go to, let's say, SushiSwap or Uniswap, they use automated market makers. So the big differences there are when you're trading perpetuals, a lot of traders want to have the advanced order types. So they want to be able to create limit orders. They want to be able to create like stop losses, take profit orders. All of these things are very important, especially when you're managing, leverage. And so with that, it's a lot easier to offer those types of things on a central limit order book model than it is an AMM model. And so most of those order types are not available on, AMMs of the world. I would say the biggest decentralized perpetuals protocol that uses like the virtual automated market maker approach is Perpetual protocol. And so with that, you could really only do market orders on their platform natively. So that's a really big difference. Another one I would say is dYdX offers cross margining of collateral. And so what that means is you could deposit USDC into dYdX, and you could use that same USDC as collateral when trading on any markets. A lot of other exchanges, especially in the decentralized world, don't offer cross margining since it's fairly complex to do so from a technical perspective. And so with that, basically every trade that you want to do would then have to be kind of like an isolated trade. So cross margining is very useful, especially for traders who are managing kind of their whole portfolio all in one, as well as for market makers themselves. And so, and that's a really important point because market makers at the end of the day are the ones providing the liquidity to the exchange. And so if they could do that in a much more efficient manner by having the ability to do cross margining, then that's going to increase the amount of depth in the books. That's going to increase the user experience for all users across the board.
Yeah.
So yeah, that's another kind of important point to note.
Yeah, and I like that as well. I was familiar with Bitfinex and had used them a bunch in the past, and of course, they're cross margin there. That I really like that aspect of it versus BitMEX with the isolated pairs with that, and I suppose what's also nice about dYdX is maybe we won't see so many Darth Arthur candles. But in the that was always like a really get looking around at other charts and you'd be like, wait a second, why does the BitMEX one look like this? Anyhow, not to go too far down that rabbit hole, but I always like those Darth Arthur candles. Anyway, yeah, cool. And yeah, so then with that, like you said, you've got 25 different markets.
Yeah, I think that's the correct number at this point in time. We're continuously adding new markets all the time, so obviously stay tuned for that as we do so. And I should also mention that actually governance now with the dYdX token has control over new markets added to the protocol.
Oh, cool.
And so, uh, yeah, we're definitely excited to work with the community there on adding a variety of new assets over time.
Yeah, perfect. Okay, we'll bring in a couple of questions here from the audience now. And yeah, one here, the first was from TyDeFi. And he says, I've heard dYdX smart contracts doesn't allow for a change where fees accrue to token holders. Is that true? Is it possible to replace the smart contract once the protocol is completely decentralized?
Yeah, sure. I can answer that. Yeah, so right as it stands right now, fees do not accrue to a smart contract. We're very clear about that. That fees accrue to dYdX Trading Inc., which operates the exchange. I can't say what'll happen in the future because I simply just do not know. But one of the main priorities of dYdX at the moment is to continuously research ways to completely decentralize the protocol. So that's one of the things that we are fully focused on at the moment.
Yeah, cool. Okay, then another one here as we, I don't know if we want to talk about this here, the anticipating U.S. customers eventually, or what does that look like?
Yeah, so dYdX, there are aspects to the exchange that are centralized. So right now we operate a central limit order book and we have our own matching engine. And with that, that means we have to abide by any and all regulations in places that we operate in. And so with that, we do not anticipate adding US customers to the exchange.
Oh, good. Yeah, so with as we get into the into like fees and all that kind of stuff too. So like how does the fees work? I guess like you've got funding as well if you want to touch on that, and even tiers for volume and whatnot. If you just want to give us a quick breakdown on that too, would be awesome.
Yeah, for sure. So I would say fees operate very similarly to what you would find on a centralized exchange. And they're very competitive as well. So we have five or six different fee levels based off of the amount of volume you do on the exchange. So if you're a new user to the exchange, you'll be paying like either 5 bit maker fees or 10 bit taker fees. And that scales down to 0 maker fees and 7 bit taker fees, depending on how much volume you do on the exchange. And then the other thing to note is we offer additional discounts to users based off of how much dYdX tokens they hold. So if you hold dYdX in your wallet, we have different tiers there, but you can get discounts ranging from 3% to 50% discounts. So pretty attractive there to obtain fee discounts if you're an active trader.
Yeah, that's awesome. just with the little bit that I've played around. I'm only a tier 2 degen, as I like to call it, but I do know a friend who is crowding in on a tier 5. Pretty stoked for him. But, and then the dYdX and holding those in your wallet. What kind of numbers do people need to hold for tokens to achieve some of those discounts?
Yeah, so the first tier discount would be 100 tokens that you would have to hold. That gets you a 3% discount. And then if you hold as many as 5 million tokens, then you would get a 50% discount. So there's quite a bit.
Yeah,
There's
well,
quite a few tiers in between those two.
yeah, cool. Right on. And yeah, so in order to get those tokens, you can just by trading and I guess like it's kind of similar to a liquidity mining program in a sense, because as you're trading, you're like kind of providing liquidity for the order book on both sides, and yeah, so it's very similar in that sense. Would you agree?
Yeah, certainly. So I'd say there are a few different like trading or rather like liquidity mining pools in which you could earn dYdX, and I'm happy to briefly talk about them. And if anyone has any additional questions, happy to go more in depth. The main one right now is a trading rewards pool. So it basically pays or rewards users in dYdX based off of um, the fees paid to the exchange, as well as open interest over the course of an epoch, which is 28 days. And so if you start trading on dYdX, you'll see like an estimated dYdX earned number that we provide there for you. And that'll change over the course of the epoch because it's based off of total amount of volume. So if you started on day one, you'd probably see a number that is pretty high, but by the end of the epoch, it would naturally decrease if you stop trading. But nonetheless, it rewards people more based off of the amount of trading that they do, or at a high level. That's what it's intended to do. So that's like the biggest liquidity provider or liquidity mining pool at the moment.
And just to interject here quickly, with these epochs, how many epochs are you guys planning to do, and how long are you planning to run this for?
Yeah. So the dYdX Foundation launched a token, and they kind of manage all of the epochs and the token distribution mechanisms. But I could speak for them based off of what they've done here. And the intention is for the uh, liquidity program to go for 5 years. Um, and you can do the math, but yeah, 5 years, and there's each epoch is like 28 days. Um, so there'll be quite a few epochs. But yeah, at the end of the day, governance fully controls the program. So if they wanted to extend it or decrease the amount of epochs or for whatever reason, or decrease the amount of days in an epoch, governance would be able to do that.
Okay, cool. Yeah, and then with that governance token, I guess like all kinds of, you kind of touched on it here so far with like being able to vote on how this can all work, and I guess is there any other, like, has there been any governance proposals that have come in that you guys have voted on that have changed the way things
Yeah,
function?
yeah, it's been really exciting to see. Before we touch on that, though, maybe it makes sense to just describe the other pools at the moment that people can earn dYdX.
Yeah,
Um,
please go ahead.
So, yeah, there's a liquidity staking pool, which is users can stake USDC to this pool. In return for staking USDC, they would earn dYdX. That USDC is then get or loaned rather to whitelisted market makers who are active on dYdX. And so governance controls the whitelisting and who ends up being whitelisted for this pool. Right now, there are only 5 market makers who are whitelisted. But yeah, the intention of this pool is like, the USDC in this pool can be given as a zero interest, zero collateral loan to these known market makers, who then use that USDC only on dYdX for the purpose of two-sided market making and liquidity providing. And so right now, this pool has like over 850 million USDC in it. So it's quite large. And market makers are now just beginning to utilize it. And so with that, like hopefully there's going to be even more liquidity on the exchange very soon. But yeah, even without that, the liquidity mining program more broadly has incentivized a lot of market makers to onboard much of their own capital to the exchange already. And so if you compare dYdX liquidity to, let's say, Binance or FTX for BTC and ETH, we have better liquidity than those exchanges already. And so, that's really important for all traders, but especially for large traders who are trading in size. You're likely going to get the best pricing on dYdX than you are on other exchanges, which is pretty huge. And then, there's another pool which is geared more towards market makers. And so if you have 5% of maker volume over the course of a previous epoch, you are eligible for this like market making pool. We call it a liquidity provider pool. In the next epoch, and this basically rewards market makers based off of things like spread, uptime, liquidity in the books. And so we track all these market makers, and they get a score, and then they earn dYdX based off of that score. And so that pool in particular is really what's driving a lot of the liquidity that's on the exchange right now. And so those are the main three pools that are active, and then there's a fourth pool, which is a dYdX staking pool. So that's called the safety module, which basically acts as the backstop for the protocol should anything go wrong. That pool actually had an issue upon launch, and so we needed to work with governance, or rather the foundation needed to work with governance to provide a fix to that pool. And so that was the first governance vote that is actually currently ongoing right now with the protocol to enact. And so, that's an example of governance already in action. And then there's actually another snapshot that was approved, and this will likely go through as well, where this is for the liquidity provider pool, where, as I mentioned, you need 5% currently of maker volume to participate in that pool. But this snapshot reduced it to 1%. And so what that means is this, liquidity provider pool is going to be more obtainable, especially for like smaller and medium-sized market makers.
Yeah, very cool. It's good to hear and good to see that governance is playing a role. Awesome. We've got a couple of questions, a couple of hands up, I should say, anyways, in the audience. Let's bring up Ku Wong. Let's see if you got something for us here, Ku Wong. We do have, please, anybody else that has questions, please raise your hand. I'd love to have you up here and get your questions asked, along with, there's always the AMA text questions is open, and always happy to take questions from there as well. Let's see if there's another hand.
So I see there's a question here in the chat that says, is dYdX available on side chains such as Polygon, or is it on ETH mainnet only? Happy to answer that really quickly. So right now it's only available on like our StarkWare layer 2 implementation. However, we are working on the ability to like deposit and withdraw to other layer 2s such as Polygon. So stay tuned for that.
Oh, nice. Yes, you'd be able to just move your funds from Polygon over to StarkWare that way, rather than having to take on the ETH gas hit.
Exactly.
Yeah, cool. NPS, have you got something for us?
Yeah, I think my question was similar to what you answered earlier, right? So if I have funds on ETH and I want to move it to dYdX to trade on StarkWare, then I have to first migrate it to Polygon and from Polygon to StarkWare, right?
Oh, actually, you would go directly from Ethereum to StarkWare. Yeah, you don't have to go through Polygon or anything. But yeah, you just have to onboard via your Ethereum mainnet wallet at the moment.
Okay, and how does that transfer process work?
Yeah, so you basically just like send USDC to the StarkWare smart contract on layer one, and then yeah, that ultimately gets transferred to your balance on dYdX.
And what is the lag time there?
Yeah, it takes about, I think it's like 10 confirmations for us to credit your account.
Okay, and the same is the lag time when I kind of request fund from the smart contract as well.
So yeah, so if you want to withdraw from the protocol, there are actually two ways to do so. So there's a fast withdrawal pool and a slow withdrawal pool. The fast withdrawal pool is basically we send you whatever funds that you're requesting to withdraw directly to you on layer one. And so you would pay like dYdX whatever like we estimate the gas fee will be, and we'll send it to you, and then we'll credit. We'll basically take whatever we sent to you on layer one, and we'll take that money on layer two, and credit it to our account. And basically, what this means and why we have to do this is because StarkWare operates in like batches, and so approximately every 10 hours or so, every batch is settled on layer one, which means that like uh, um, if you wanted to withdraw all your capital without going through the fast withdrawal, you might have to wait until the slow withdrawal, which happens again once every 10 hours. And obviously, that's not a great user experience. So we fund that pool ourselves at the moment. That is capped at, I think, 200K USDC per batch per user. I think we have approximately $10 million in that pool right now. So for average users, it's totally fine, and they'll never have to go through slow withdrawals. But for very large users, let's say if you wanted to withdraw like $1 million or something, you would have to go through the USDC, or sorry, you'd have to go through the slow withdrawal pool. And again, that could take up to 10 hours to withdraw your funds.
Okay, sounds good. Thank you. Can I ask another follow-up question?
Sure.
So you mentioned that I can migrate any asset supported by dYdX out of the 25 assets and start trading, right? And because of the cross kind of I don't know, I forgot the term you were using, but because of the kind of a crossing between the assets, I can trade any assets, gaining exposure to that asset through a perpetual contract, while the other position would still remain there. And if there's a need of liquidation, of course, you would liquidate. But if I transfer Solana for a minute, I can start trading Ethereum, right?
Yeah, so not exactly. So yeah, the only form of collateral that dYdX uses is USDC. So
Okay.
everything is margined in USDC on the exchange. So we don't take in any other forms of collateral.
Okay, so I have to transfer USDC, and once I do that, then I can start trading any other 25 supported
Yes.
okay, coins on the platform. Okay, got it. Thank you.
All right, thanks.
Have you guys considered any like zaps or anything like that where you could just zap in from there with somebody like depositing whatever asset they wanted and it just gets kind of liquidated? And then liquidated to USDC and moved over at the same time?
I'm not sure if I totally know what you mean by zap, but basically the reason why we only have one form of collateral on the exchange is for technical reasons. So it was a technical constraint that we could only have one form. In the future, I'd say we're definitely doing research in ways in which we could offer more forms of collateral. So, for instance, a lot of people want to trade all of these products but use ETH as their form of collateral. So that's something that we may and are looking into for like future upgrades.
Yeah, cool. All right. Yeah, well, there's a couple other things that came in here. One was saying that from Mikey here, he said, I heard that some of the airdrop dYdX tokens were not claimed by users. What will happen to those tokens?
Yeah, so if a user got became eligible for a dYdX token retroactive mining distribution, they had to hit certain milestones to actually obtain the dYdX. And so if you hit those milestones before kind of the date in which it was cut off, then you will have the ability to claim your dYdX in perpetuity, which means forever. If you didn't, and there were a decent amount of people who did not meet those claim milestones, those dYdX tokens were transferred to the community treasury, and so the community treasury could do whatever they want with them.
Cool. Yeah, and the other question here I was looking at was the dYdX staked in the safety pool accrue tokens in a way where the staker is not diluted by other ways. Tokens are emitted through market maker incentives. Is the proportion safety sufficient to prevent dilution? I don't know. I guess that's like kind of a little bit price talky, but yeah.
So I mean, I guess on this question, I don't know if this is the answer that he's looking for, but yeah, the only incentive basically for people to stake to the safety pool at the moment is kind of the dYdX rewards that they would accrue. Again, the safety pool is technically not even live yet. It has to go through a governance upgrade for it to become live. But yeah, beyond that, governance is free to upgrade the contracts or kind of yeah, I guess they can migrate them, they could upgrade them however they please, if there is something that kind of needs to be addressed.
Cool. And yeah, just the other part there too, just like curious about how your investors are involved with the roadmap and strategy. Yeah, you've kind of touched on it a little bit already, but I don't know if there's anything further with that.
Yeah, there's not too much really, other than they support us in a variety of ways. Some of our investors help with the research phase of things. So we are working with some of them at the moment to think about ways in which we could fully decentralize the protocol over time.
Yeah, cool. Nice to hear that decentralization is the focus. That's awesome. If anybody else has questions, please raise your hand. We can get you up here and ask those. And if there's any other things, please bring them into the AMA text questions. Yeah, and then as far as like, if people are looking to swap and get the dYdX token, it is available on Sushi. I think we were one of the first pools for dYdX for LPing. And yeah, when I was looking at that, I think earlier today here, it was like almost 11 million in TVL and like 180 sushi a day and like 35% APY. So not a bad little pool to be a part of. If you're interested, you are able to get the dYdX token on Sushi, and you can LP for it as well. So have a look at that.
Yeah, I should just also mention, dYdX. We're not affiliated with the Sushi pool. We actually don't support any trading of the token. So yeah, I'll just leave it at that.
Yeah, good disclosure. Yeah, that's cool. That's good. But yeah, if anybody else has questions, please bring it up. Let's have you up here, and you can ask away or in the AMA text questions. But yeah, if not, is there any other I guess like yeah, new features or any like alpha leaks or anything you guys got going on?
Yeah, so I'd say there are like a few different things that I would draw attention to. One is we are currently and will continue to run a variety of like promotions on the exchange. So right now there's like a trading competition that's ongoing where there's up to 250K USDC of prizes available. We'll likely run a lot of these types of trading competitions over the course of the coming months. So definitely stay tuned for those, and join our Discord and look at all the announcements there for all the different types of promotions that we'll launch in the future. And then lastly, from a product perspective, we're working on a mobile application, which I think is going to be really cool. I don't think, there aren't many, if any, like DeFi protocols that have their own, mobile app. So having that, I think, again, will just, put us on par with a lot of the centralized exchanges. So yeah, stay tuned for that release in the coming months as well.
Yeah, that's cool. So an actual app that's going to be available through Google and Apple stores.
Yeah.
Wow, good for you guys. Cool. Yeah, I don't know. This is probably a great place to wrap up here. Awesome. Thank you very much for coming on, Corey. That's yeah. If there's any, if you want to just drop the websites and any socials, how to find you guys.
Yeah. So definitely invite you guys to pop into our Discord and join our server there. Also, feel free to follow us on Twitter. And if you want to trade on dYdX, yeah, feel free to do that. The URL is trade.dydx.exchange.
Yeah, sweet. And you can trade sushi there too. Just saying. So yeah, that's cool. Yeah, and then for anybody that's been in the room for 15 minutes or more, you should be logged by the Master POAP V2. So you will be eligible for a POAP, and you just head over to our Get POAP channel, and about give it about a half an hour, 45 minutes for everything to sync up and let me get everything in there. And it's and then type !claim to get that. This will also be recorded and will be up on the Sushi official YouTube channel, so you can check it out there afterwards. Hopefully have that available later today or tomorrow. And of course, follow me on Twitter, 0xtangle, for all the latest AMAs coming up with sushi. And for any of these events, you can find our sesh bot that is putting out in the calendar channel, so you can get notifications of any AMAs coming up and any other events. And we're also starting to utilize the Discord events channel tab as well. That's kind of a new feature that Discord has brought in, and I would love to hear any feedback from everyone on if that's working or how they like that, and thoughts around that. So cool. Thank you very much, Corey. Thanks everyone for coming out. Thanks for the questions, everyone, and we'll see you guys soon.
Thank you.
All right, thanks. Bye.